Now you're in control of your money instead of the bank being in control of your money, paying you pennies. 0.06% I think is the average in a bank account, and then they take it and go make 400 to 1,300% on your money. So why not just have that money, instead of it flowing through their bank, go to your policy, and now you use it to become your own bank.
Hey, what's going on, Cash Flow Hackers? It's Chris with Life 180, and I'm here with my buddy again, Devin Burr, Mr. Burr, on TikTok and Instagram, and I think, are you Mr.
All the
Burr?
things.
All the things.
All the
He's
things.
better than I am. I'm Life 180 here, and then Real Chris Kirkpatrick on all the other things. But here's the deal. Today we're going to be talking about the 3 myths and misunderstandings, I guess is the best way to put it, about infinite banking. Now, we both talk to people about infinite banking all the time. We just got done talking about, okay, let's try to simplify it. Take the most common misunderstandings that people have about infinite banking in the conversations that we have with people when they give us a call, emails, all that stuff. And we thought we'd just address them in this video to make it really clear and concise so you don't have those misunderstandings yourself. And so the first one, let's just get into this. I'm gonna have you talk about it. A lot of people think that you need to have a lot of money to start infinite banking. And it's kind of your fault. I'm blaming you for this because like you like to flash your R8, you like to, show all the stuff that you do, and people say, hey, it's good for you, buddy. Like that you have, 600 grand in your policy and you can go buy a $200,000 supercar and all these things. But like talk to people about why you don't need to have that kind of cash to be able to get going.
So it's a huge misunderstanding. A lot of people think that life insurance and infinite banking is for just wealthy people. It's the furthest thing from the truth.
Sure.
If you have a lot of money, it works faster. Really, that's all it is. Like, if you don't have a lot of money, you have to build up your cash value over time. But the way I look at it is your money's going to go somewhere.
Yeah.
You're going to make money regardless of where you're at in your life, where you work. Your money is going to flow somewhere. Most people, where does it flow? Through their local bank, right? Before you even touch the money. So what happens is most people have direct deposit. As soon as they get paid, Uncle Sam takes his cut, right? And then the money goes into a bank, Chase, Wells Fargo, Bank of America, whatever it might be. The money is held there. Now, what happens when the money's held there? It's not held there.
Right.
It's deployed. The banks take your money and they go make money with it.
Right.
So all you need to do is start funneling your money, instead of through their bank, flow it through your bank, which is your specially designed and engineered whole life insurance policy with a mutually owned company. That's it. It's not with anything else. It's with that.
We'll talk about that later.
For sure. And you don't need to have a ton of money. You just have to flow your money through that. People have different levels of income, right? So if you have a lot of money, flow it through the policy. If you don't have a lot of money, flow it through a policy. Now you're in control of your money instead of the bank being in control of your money, paying you pennies. 0.06% I think is the average in a bank account, and then they take it and go make 400 to 1,300% on your money. So why not just have that money, instead of it flowing through their bank, go to your policy, and now you use it to become your own bank.
So one of the things that I talk about too all the time is on this point is, yes, once you hit a certain stage, you're going to be able to do big, fancy, awesome things like he does with supercars and real estate, like what we do with real estate. The bottom line is, though, every single person in this world, there are abysmal stats out there. I've done this a lot. I've done a lot of videos. I talk about this. 64% of Americans right now don't have access to $2,000 in case of emergency. 64%. And what's crazy is, out of the 36% that say they do, 70% of those people say they'd have to liquidate their 401k or qualified account to be able to get it. Right? So when you break those numbers down, it's more like 85 to 90% of people don't really actually have access to $2,000 in an emergency fund, right? So the problem in this country, and this is a foundational belief of why I do what I do as far as the education that I give people, the problem in this country, we don't have enough safe money for people. People's financial structure, their financial design, all that stuff is so jacked up and upside down, quite frankly, literally, from where it needs to be. They're taking risks too early, they're speculating too much, and because of the way the market cycles go, they're really like, yeah, maybe you felt really good for the past decade because we were in a great bull run, but you didn't design your life properly. So now we're going into this period of uncertainty right now. And if you got all your money in your 401k and all your money in the markets and all your money in crypto and all these speculative assets, and you don't have the money in a foundational, you don't have a cornerstone asset as the foundation of your financial life, like what we talk about with the whole life policy, it's not that that's the investment, it's that it's just going to help make it so that you can operate and act like a good investor.
It's the foundation.
It's the foundation.
Everything you do with money.
Totally. And so from that perspective, you need an emergency fund. I don't need to convince you of this. Like, you probably say, hey, I need an emergency fund. And you're probably thinking, damn, I don't have the level of emergency fund that I want. So my encouragement, when we talk about you think you need a lot of money to start, well, you need a lot of money to pull off big things, sure, but you got to get there incrementally. And what's big to Devin, what's big to me may be different than you. You may have a different use case in your life, but it doesn't mean that it's not applicable to your life. The principles of this stuff don't change. And so you need to go get your reserve account. You need to get your emergency fund, your opportunity fund. You need to build that up before you start going to speculate. And so my answer, and I know a lot of people like to throw out, you need like 10 times your age to get started. I would say that's probably a good rule of thumb to follow. But the ultimate rule for me is like, how much money do you want to save, right? Like and that should be in alignment with like, what do you want to accomplish, right? And so you need to make sure that whatever you're saving is in alignment with where you want to go. And if not, and if you're not doing that and you have any expectation of achieving financial success and you're not doing this, I'm just telling you, you're lying to yourself about your odds of getting to where you want to go. Like, it's great to feel that, but a dream without a plan is just a dream. It's not going to get accomplished.
Right.
And so how much money do you need? As much as possible to reach where you want to go, but this is the place that you need to start. That's
100%.
my belief.
100%.
Right?
Yep.
Cool. So, number 2, what do we say?
Numero dos.
Oh, hey, life insurance is a horrible investment. That's I hear it every day.
If I had $1 for every time I heard that, I'd have a lot more in my insurance policies.
There you go.
It is a horrible investment because it's not an investment. Think about this, guys. Investments have risk.
Yep.
Investments can make you money. They can also lose you money, right? I think so often people want to chase a big return. Mm-hmm. The bigger your return you're chasing, the more risk you have to lose your principal.
Yep.
Right?
Yep.
So if an investment has risk, you can make money or you can lose it.
Yep.
Life insurance is not an investment because you can never, I repeat, never, it's contractually guaranteed to never lose value. Guaranteed.
In a whole life policy.
In a whole life insurance policy with a mutually owned company that pays dividends. Guaranteed to never lose value. So that means it's not an investment.
Yeah.
At its most basic form, it is a savings vehicle. That's it.
Savings account on steroids.
Yes, it's a savings account that looks like Ronnie Coleman if you follow bodybuilding, or Jay Cutler.
Help your savings account get ripped.
Right. It's a savings account that has extra benefits, right? It's a savings account that allows you to move money and control money without interrupting the savings component, the compounding growth.
Yeah.
Now, savings accounts, even with high yield savings accounts nowadays, and I know because I have one, they're up to about a 1.75% Yep. That's the interest. However, if I take that money from the savings account and go use it, what happens to that interest?
You stop losing it.
I no longer
Stop
earn
earning
it.
That's what I meant.
So in a properly structured whole life policy, your money never stops growing because it never moves from the policy. You're just using the policy as collateral to borrow the insurance company's money.
Yep.
So you're not interrupting your compound growth, but now you have control of that money. It costs you money to do it, but you have control of money at a certain cost. Now you take that money and go make more than what it costs you, or pay off a debt that has higher interest than what it's costing you. Take that debt payment, pay it back to yourself.
Yeah.
You're keeping the spread.
I say all the time, infinite banking is not an investment. Properly designed whole life insurance is not an investment. It's really more of a financial system and a process and a philosophy, right? And so I look at it like this. Infinite banking is a set of rules. It's like a filter that you run every financial decision that you ever make through it, right? And you, the control component of this, it puts you in the driver's seat of this supercar, no pun intended, of a policy to be able to help you get where you want to go faster. But by you being in the driver's seat, you being in control, what he just talked about, you're going to have a cost of money when you borrow against it, when you leverage your policy. But since you're in control, you get to decide when and where and how and if and whatever, based on it going through that filter, it makes sense for you to leverage it in that way, right? So as with infinite banking and whole life insurance as a foundational component of your financial life, what happens is you invest in yourself, you find opportunities. Opportunity, luck, favors the prepared, right? By getting your policy built, and the bigger it gets, the more opportunity will find you, right? That is just a fact. And so what happens is you build this up. Now opportunities start like just bombarding you and coming at you. You then get to put them through your filter and be like, all right, what is the opportunity? What is the return on this going to be? This is what I know what my cost is. I'm in complete control. And if it doesn't make sense, you just don't do it. Right? And you just become a much more sophisticated investor in the process, in learning how to identify opportunities, learning how to deploy your money in different ways. And that's, to me, that's why I always call properly designed whole life insurance policy the BASF of the financial world, right? Like at BASF, do you remember that in the 90s? So BASF, we don't make the products you buy, we make the products you buy better, right? Like every time I would watch the NFL, it was like at BASF.
Before my time.
Oh, maybe a little bit.
I was born in 85, so
you should remember. Like maybe I just watch more NFL, I don't know. But it was like at BASF, we don't make your fishing line, we make it stronger. We don't make your paint, we make it brighter. We don't make this, we make it that. So their company was all designed around making everything else better. Whole life is not your investment. It makes your investments better, right?
So true.
That's what it does, because it's going to allow you to actually operate like a better investor, because you're going to have a financial foundation of stability and guarantees.
Yes. And back to the point of risk, guys.
Yeah.
Risk is what makes an investment, right?
Yep.
If there is a lot of risk, there's potentially a lot of upside. If there's very little risk, there's not very much upside. If there's no risk, there's not a ton of upside. That's how a policy is. If you just put money in a policy, you're not going to become rich. It's how you use the policy that dictates how wealthy you become and what you do. The fact of the matter is, you have control. When you have control, your risk goes down. Think about this. If you're driving in your car, you're going 90 on the freeway. Your brakes go out. You have lost control of stopping your car, so your risk of crashing goes up. It's the same thing with your money. If you lose control of it, your risk of losing it goes up. If you have control of it, your risk goes down.
Yeah, that's so true. And here's what I'll say about risk when it comes to your money. It seems to be only in the financial space have we been duped that the only way for you to increase your chance of success is to increase your chance of failure. Like, think about that. Like,
so true.
Nowhere else in the world are you going to say, yeah, I want to achieve this goal. I want to hit whatever level of success. And the only way I'm going to get there predictably is to increase my chance of failing along the way. Like, it makes no sense. Only with money do we do that, right? Like,
I want to marry the most amazing woman, but the risk of it is you'll never see another woman in your life.
Yeah, listen, and so here's the deal. But then when we go to the other side of the spectrum and we look at the guaranteed side of whole life, there's also typically downside, I should say, with guaranteed assets. You have to either give up liquidity of them, like you got to put them in bonds, or you got to put them in some sort of fund where you don't have access to that money. So the trade-off is that if you want guarantees with liquidity, you typically have to put it into a savings account because you get a very, very small guarantee, like 0.6%, but it's highly liquid. Whereas if you want guarantees and a decent return of 3 to 4% in a bond, or 5% in a bond, maybe a corporate bond, you don't have the liquidity, right? And so where whole life comes in is it's a savings account, and you have the liquidity of a savings account effectively, and you're going to have the guarantees that are 30 to 40 times higher than you're going to get in a savings account, which is I mean, it's amazing. Plus you get living benefits and ancillary benefits and all that stuff along with it. So that goes back to say life insurance, the misunderstanding is a bad investment. That's a misunderstanding because it's not an investment at all, just to summarize. It is a savings alternative, and it's going to make your investments better if you set up your financial structure utilizing whole life as the foundational asset in that journey.
I love it, dude. It's not an investment. It is a concept.
Yeah.
That's really what it is. Because what I've learned is for money to grow, it's got to be in motion. Mm-hmm. It's got to move. Yep. Like think about a bank. A bank doesn't keep your money in a vault in the back.
Yep.
As soon as you deposit money in the bank, they lend it out. When it comes back to the bank with interest, what do? They lend it out again. Mm-hmm. The more they move the money, the more money they make. So money has to move in order to grow. However, for money to compound, it has to sit still. So how can you do both? There's only one vehicle that allows you to do it. Properly structured whole life insurance.
There's this thing I used to say. It was funny. I don't know why it just hit my head, but there's a little phrase I used to say to make jokes, but it was, you make money, your money makes money, the money your money makes money. You can't make more money than your money makes, and that's why you need to work with me. And so, like...
I'm so confused. I'm intrigued.
But it's all about compounding. It's all about control. It's all about putting your money in a place where it's going to constantly grow. And the worst thing that you can do is lose money, take unnecessary risk, interrupt that compounding. The younger you are, the younger you can start, the better you are, the better positioned you are because you have time and leverage. And if you could just be consistent and take advantage of that time, you're going to be...
I'll add one more thing to that because something just hit my head.
No, it's okay. It's good. This is why we don't script this. We're just rolling.
So we're in a time right now where it's probably more important than any other time to not lose money.
Totally.
Protection of wealth is more important right now than building wealth, in my opinion.
Totally. I agree.
So here's the way you want to look at it. Let's say you lose 50%. You've got $100,000. You lose 50%. You now have 50 grand. Mm-hmm. Just to get back to square one, you have to earn 100%. Mm-hmm. That doesn't include if you factor in taxes, right?
Fees, anything else that like in your investments, like it could be way worse than that.
So what you want to focus on right now, guys, is protecting your capital.
Yep.
Protect it. And the way you do that is put it into a policy because it is guaranteed to grow. Yep. It's protected against lawsuit and judgment in most states. So once it goes there, it's protected. Now, what you do with it outside of the policy is going to dictate how much cash flow you can bring in, how you can build your wealth, how you can get more money coming in and coming back to your policy. That's all outside of the policy. But the policy itself is protection. Protects your money against loss.
Perfect. So let's move on to number 3.
Oh, you're going to have
this is going to be fun. With this one. I've got a lot of videos on this, but I just can't go a video like this without, because there's so many trolls out there and so many uneducated agents out there about this. And I'm going to let you actually talk about this a little bit because, well, I'll say why in a second. But the misunderstanding is that you can do and implement infinite banking with Index Universal Life. Now, there's a lot of people, and I'm going to just speak to TikTok specifically because that's where I see so much of it. That's where I see it on Instagram, I guess, too. We got people like Curtis Ray with MPI, Doug Andrew with the Laser Fund, all the World Financial Group people that think you can do infinite banking with Index Universal Life. The bottom line is you can't do it. Now, full transparency, I'm not licensed. I don't sell personally. I coach. I talk to people, I help them all day long, but I don't sell personally. I have a team of people that sell. So because I'm not licensed, I'm not allowed to be an authorized infinite banking practitioner, right? I'm working on it to pull some strings and get connected with the right people. But Devin is an authorized practitioner, right? What do the people in the Nelson Nash Infinite Banking Institute talk about with Index Universal Life? What is their opinion on it? Because Bloodbath, right? So all the people that go, because I get this a lot, I don't know if you do too. All the people say, Chris, you don't understand infinite banking because I am doing infinite banking with, I had a conversation this morning with a guy on TikTok, just back and forth, and he was like, you obviously don't get it because I'm doing infinite banking with my IUL. And I'm like, nah, you don't get it, bro. Like, you don't even understand what infinite banking is. What they do is they think infinite banking is simply arbitrage. Right. And if we're doing it from that perspective, And we're just trying to position infinite banking as just that arbitrage. Well, then, I guess on paper it looks like, even though there's a lot of risk in it, they would say that you can do infinite banking with IUL, but you can't because it's about way more than that. So I'm curious to hear their feedback.
So this is so funny.
It's hilarious.
So the creator of the concept, Nelson Nash, he created it, right? He specifically said to never use an index universal life for infinite banking. Mm-hmm. The creator of the concept. So the main reason, and you know more about him than I do, but sure. The main reason, in my opinion, that an IUL just does not make sense to use for infinite banking is the lack of guarantees. Period. Mm-hmm. Everything we just said about this not being an investment, right? It's a savings vehicle that allows you to move money, gives you stability, gives you control, and then also lets you move money, right? In an IUL, the fees aren't guaranteed. The cost of insurance goes up every single year because it's on annual renewable term.
Yep.
So what that means is every year that you get older, you are more expensive to insure exponentially. The older you get, it gets ridiculously expensive. That's why when people get term, they usually outlive the term. The insurance company knows this.
Yeah.
People are usually not going to die in their 60s. They're going to die in their 70s, their 80s. So when they get to 65, they got a life insurance policy at 35 for 30 years. They're 65 years old. It was $40 a month. Now they want to get that same coverage when they're 65. It's like $800 a month, and they can't afford it.
Yep.
So what I'm saying, guys, is the cost of insurance is going to keep going up as you get older. The fees, they're not fixed in. So let's say the company has a down year. Mm-hmm. They can raise fees to make up for those losses. The cap rates. So if you're capped at, let's say 12%, if the market's at 20, you get 12% in IUL as your crediting rate. They can lower those. So if they have a bad year,
in most cases, they can lower them down to 3%.
So if you got 3% is your cap, that's as much as you can earn. Let's say in a down year in the economy, the markets crash, you have a 0% floor. So that's the whole setup.
Yeah. Upside potential, downside protection, all this stuff.
Yeah.
Like it's
no losses. But here's the thing. If there is a 0% in the market, so like you're at a 0% floor, but the market's at 40% loss, whatever. You're at 0%. You're not earning anything in your contract. Mm-hmm. But you're 65 years old, 70 years old. You can't lose money at that point because you don't have as much time
to market risk. You can't lose market risk, but you will have other fees and expenses, the insurance expenses. Plus, what I'll say is
the cost of insurance.
If you're utilizing it for infinite banking, what have you done? You've got money in deployment. You're utilizing that money for other assets, so you have a cost of borrowing against that money, right? With infinite banking with whole life, you can never lose. Like the market going down is never going to have an impact on your loan rate, right?
Yep.
On index universal life, not only are you going to have those extra fees and expenses, but whatever you have out there in loans, let's call it you have a 4% loan. Now you have a negative, so that extra 4% loan expense is going to compound against the policy on its own. And so that's how these things in retirement turn out of control. And so whether you're using IUL for infinite banking, which is what we're talking about, it's definitely not possible, especially because of that. The foundational component of infinite banking is control. Right? You don't have control of all the most important variables inside of your IUL. That is one of the biggest things. Now, the other thing I got to throw in here, just because I can't help myself with IUL, is what I just talked about and how loans work when you're utilizing it for tax-free retirement income, because that's the number one way IULs are sold. I'm telling you right now, a lot of people are talking about you can get 8% return or 8%
average
income stream. If you got $100,000 in a IUL policy, you can pull out 8% a year, $8,000 a year, for instance, or $1 million of cash in your policy, cash value. You could pull $80,000 a year out. Nothing could be further from the truth. If you could do that, if the insurance company could do that for you after all fees and expenses and all that stuff, they'd be getting way more than 4% in their general fund. They just can't do it for you. And so there's a lot of things that are happening, a lot of regulations around IUL that are actually changing because of all the people misrepresenting it. There's a thing called AG 49B that's going to be coming out. Bobby Samuelson talks about it a lot. Go check him out, lifeproductreview.com. And it's just, if you're a licensed agent especially, you got to go check that out. It's just a plethora of information for you. But ultimately, those are the three things, right? Like people think they got to have a lot to start, and you don't. And in fact, you should just start with whatever you can afford right now, and you can stack policies. That's the one thing we didn't say. As you get more, build your first policy, build it maximum efficient as you can. That's the other maximum efficient contract instead of modified endowment contract, right? So build a maximum efficient contract for where you are right now, even if it's smaller than you'd like it to be. There's nothing wrong with going in and getting your next policy and stacking on top of it. That's what he did. Yep. And so do that. That's number one. Start with wherever you are. Number two, it's not an investment at all. It's going to make your investments better. Number three, you can't do infinite banking with IUL. There's no ifs, ands, or buts about it. Anybody that's telling you that you can, they don't know what they're talking about. Do more research, watch more videos, watch my playlist on Index Universal Life. And when you understand all the components of IUL and how they actually work, you'll understand that you don't have the control that you need to actually implement infinite banking.
Yep. One last thing I want to add to IUL.
Please. Awesome.
I know you're going to love this.
Yeah.
Because it's IUL, so you hate IUL.
Yeah.
So, one thing about whole life, it stood the test of time. The first contracts were written in the 1790s, I think. A long time ago, right? And the companies that we use have been profitable every single year through the Great Depression, World War I, World War II, meltdown of 08, Spanish flu, COVID, you name it. The companies are still profitable, which means if it's a mutually owned company, you get dividends, right? They have stood the test of time. IULs came around 80s, right?
IULs were created in 1997. Transamerica created the first IUL in 1997. But I got to say, until 2009, there were only like 9 companies doing IUL, and there were only really a couple companies doing them. They didn't have any significant market share as far as the insurance permanent cash value life insurance space until 2009. And so it really, a lot of people like to lean on 1997 is when they were created, but they really didn't start having any kind of traction till 2008, 9 after the Great Recession.
So let's say someone got a contract for an IUL in 97, right, when it came out, 25 years ago. Okay. Let's say if it was me, I'm 37 right now, 25 years from now, I'll be 62, right?
Okay.
I think my math is good. I usually use a calculator, guys. So if I'm 62, I'm now starting to gear up for retirement. So the people that have actually got those first policies, there's no real proof that it works yet.
Right. It's a financial experiment.
It really is.
Yeah.
And when you know the inner workings of it, they are doomed. They're going to implode.
Man.
Period.
So you get me going. So I can't stop. So here's the deal. Here's the deal. A lot of people on TikTok, YouTube, Instagram, social media people, that's how IUL is getting so much traction right now. There's a lot of people, World Financial Group, PHP, PFA, all these network marketing companies that are doing IULs. There's actually a class action suit filed now against PFA in their IUL space, which is kind of fun. Hopefully people aren't getting too hurt from it, but unfortunately, this is the negative side of what people are doing. But the bottom line is when we look at what's happening with Index Universal Life, when we look at the history to what Devin was just saying, I created in what's called the IUL Challenge, right? Because I am so tired. Most people that have been in this industry that are pushing it on social media, that are talking about all these different things, what they're doing or when they're talking about all the positive things about IUL, what they're doing is they're bastardizing the message of whole life. They're stealing all the good parts of whole life, interjecting their product when it's not applicable, when all the success cases from whole life, they're just applying it and trying to sell their product of IUL, which isn't even usable in the situation. Here's the deal. I did this IUL challenge because most of the people that are doing this haven't been in the industry long enough to even know what they're talking about, quite frankly. And what I did with the IUL challenge is I said, here's the deal. Show me an illustration that's more than 10 years old. Show me an illustration. So I want somebody that's been around, that can see this, that has a policy that's matured and gotten to the end of the surrender period. Because I don't care what it looks like, how it's performing on the accumulated value when the surrender charges are high. I want to know what it looks like at the end of 10 years. And we just got through the greatest bull run of all time, right? S&P, greatest decade that it ever had up until last year. And so with a product that's sold on upside potential and downside protection,
It should be crushing.
it should be slaying because it's the greatest bull run of all time. So the upside potential, you should be participating in that, right?
Yep.
Show me one policy where the original illustration was beat or at least matched by the current illustration 10 years later. And I've offered to give people $1,000 if they could show that to me. Not one person has been able to do it.
Yep.
Proof is in the pudding. I don't care about your opinion on what you think these are going to do. I care about what they actually do. And that's where whole life stands the test of time. And that's why I love whole life. And that's why if you're going to do infinite banking, you need to do it only with whole life insurance.
Yeah, and guys, we put this stuff out. I put content out, Chris
Yeah.
puts content out to really just inform people, to
Yep.
educate, right? The more people we help, the more successful we become.
Yep.
So if you guys can take anything from this and you want to like change your life, find something that helps you and just, give it forward, share it with other people.
Yeah.
One thing I will tell you though is you hit on it, and it's so apparent that people take on social media whole life and turn it into index universal
I know.
life.
It's
Prime
nice.
example, I'll give you 2 examples. There's a video that I made about whole life, how I compare it to an equity line of credit on your house.
And it went viral.
It went viral.
Yep.
And then this lady did a duet side by side.
World Financial Group.
Did a duet side by side, and then put that onto Facebook Reels. It's got 10 million views. Didn't put my name. Put IUL and all this stuff. I messaged her. I'm like, no video credit?
No video credit, and you're lying about it at the same time.
Crickets.
Way to go.
Another guy, the same video, he literally remade the video word for word, the same way I did my camera angles, everything.
Oh my gosh, really?
Word for word. Except
my gosh.
he just put IUL instead of whole life. So literally like
People.
plagiarizing my content. But that's what's going on right
And
now,
he's
guys.
not nearly as pretty as this guy either. That's the thing.
If you can edit this and put a little ding.
Oh, he will. It's happening now.
But yeah, we're here to educate guys, and when you have the right information,
Yeah.
once you have that, what you do with it matters. So
Yeah.
take this information, keep researching, keep feeding your mind the right information.
Mm-hmm.
And then once you have it, run with it and help other people.
Amen. All right, guys. Well, this video went way longer than I thought it would. We had a lot of fun. We improv a lot, obviously. But if you have any questions about anything, if it didn't make sense, leave comments in the comment section below. If you want to reach out, you can follow him. I'll put links down in the description to go check him out on his channel. Make sure you subscribe to Devin. If you haven't subscribed here already, make sure you subscribe, hit the bell. That way you're notified every time I launch a new video. Till next time, have a blessed and inspirational day. Talk soon. See ya.